Hello, everyone. Good morning to you today. And I hope you all are doing well and getting ready for the New York session today. So before we kickstart the live session, I would want to confirm that we're on the same page here. Kindly confirm in the comment section if you can hear my voice and can see my screen by typing hi in the comment section. So I would like to see some feedback so that I can go ahead with the morning live. So let's see what we have in the comment section. Okay, so let's see. I'm trying to load up my comment section. I would like to see some feedback, please. Okay. All right, Tony Hamad, good morning to you. Thank you very much. SMT 33425, good morning to you too as well. German Style, thank you very much. Kuratul, good morning. Goral 982, good morning to you. Hi, Carrie. How are you doing today? Good morning, Carrie. Trust you are doing well. And 5512, good morning to you too. All right. So these are positive feedbacks that we are good to go. So I'm so excited to welcome you to another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, and we shall be evaluating and reviewing the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, I'm so excited to welcome you guys on board. And what we simply do here is to gather here as a community, review the financial market, and most importantly, at the beginning of the week, we have random pairs that has been chosen, as we have been monitoring this pair since the beginning of the week. So we monitor these pairs, review the positions ahead of the New York session, manage our existing trades, and look out for more trading opportunities during the New York session. It's okay, it might look a little overwhelming at first, but I advise you to remain patient, stay tuned in, and with time you get to understand how this works, and you will be able to use the informations you have gathered here to make your own individual decision. So once again, you are welcome on board, and let's dive right into the business for today. So as usual, you know what we normally do at first. What we want to do is to keep tabs with the fundamental aspect of the market by looking at the economic calendar. So the economic event is one of the catalysts that we normally look forward to, that will be bringing some liquidity into the market. And you know, if price action does not move, there is no way we can make money off the market. So we need price movement to happen. In fact, we need huge price movement to happen for us to make money. And one of the factors that supports that insight price movement is the economic event. And in that regard, we are going to be focusing on high impact macroeconomic events that will be affecting the pairs that we have been monitoring since the beginning of the week. And these are the pound sterling, the US dollar, and the Japanese yen. Now, looking at the economic calendar for today, Wednesday, April 19th, we have the consumer price index coming in from the UK docket. And this is a data that is released by the National Statistics, and it measures price movements by the comparison between the retail sales of a representative shopping basket of goods and services. It is a very key indicator into measuring the inflation and changes in the purchasing trend. So it's a very high impact event that everyone in the market will be looking forward to. And this actually happened about 4 to 5 hours ago. And considering, if we look at the previous data, it came in at 10.4%, and we had a consensus projecting a 9.8%. But the actual data, as you can see here, came in at 10.1%, which is quite on the high side compared to the projection, but still on the lower side if we compare it with the previous data. So we had a positive variance of 0.90, which is not really that impressive when it comes to looking at the health situation of the UK economy at this point. But it's okay, and we have seen immediate reaction in that regard on the GBPUSD. So we are going to be looking at that and how we intend to make decision based on that current market structure. So beside the consumer price index for today, we don't have any other macroeconomic event to look out for. So we shall be diving right into the market structure to kickstart the business for today. So the first commodity we are going to be looking at today, as usual, is the US oil. And look at what we have here on this chart on the US oil. You will see how price action has been on a bearish momentum since the beginning of the week, as price action has continued to find lower lows and lower highs, hereby emphasizing the strength of the sellers at this particular point in time. Now, if we look at how the week has started for us on the US oil, you will see initially we had a chopper situation right between the $82.60 level and the $82.20 area, hereby giving us a little indecisive phase at the beginning of the week. And you all know what we look out for whenever we have this kind of simple setup. We want to remain patient, waiting for either a breakout of the resistance line or the breakdown of the support line of that channel for trading opportunity. And with our stop orders placed at both ends, we saw how price action broke down of the support line at the $82.20 level to give us a signal that we might be in for a bearish momentum for the week. And this actually happened prior to the beginning of the live session on Monday. And one thing I stated here is that we will need some confirmation to happen, which will definitely come in the form of a retest of that structure which was going on during the live session on Monday. And I told us all that we could have a sell stop order below the $82.20 level to trigger a sell momentum to the downside. And in fact, we were lucky enough to be part of that position, as that move right there moved about 170 pips before we begin to see buy pressure resume in this market. And we were also opportune to add as much as, I think, 2 more positions there, as we had the breakdown of this key structure at the $81.75 level and the breakdown of our very important key level that we identified at the beginning of the week at the $81.50 level. So we had about 3 positions running on Monday, giving us roughly close to 300 pips before this bullish momentum began. And during our live session yesterday, we acknowledged the fact that price action had been trapped within a channel here between the $81 level and the $80.60 area, where we were looking out for trading opportunity at the breakout of either side. Though I had some little readjustment to this current structure, as the trend line we had yesterday was around this area, as this all engulfing candle that broke out of the $81 was a new setup that evolved during the early hours of today, which made me readjust the trend line. So as at yesterday, this was where our trend line was, capturing these lower highs here, when I said if the trend line will definitely be our yardstick for trading activity yesterday, as if price continues to trade below the trend line, we shall be looking out for more opportunities to sell. But if at any point in time price action breaks out of the trend line, it told us that we might be getting ready to buy the US oil. And one thing I stated here yesterday, if you recall vividly, was that a breakout of the structure will still need some confirmation in the form of a retest of either the structure here or the trend line to give us an opportunity to buy. But that did not happen. Some of us will have bought at the $81 level, but I hope that you moved your stop loss to secure that buy position before price action took you out of that position. But if you had gone out in a loss, it's okay. We're still very profitable on the US oil commodity since the beginning of the week, as we have scooped over 300 pips prior into that particular moment. So at this point in time, I will be deleting this one as the trend line there is no longer relevant. So we are going to be focusing on this trend line for today, and that is this one that you can see here, which I am highlighting right now, and this will be our yardstick going forward into the later part of this week. And look at what happened during the early hours of today. Remember, yesterday we had a sell stop order below this $80.60 level, which happened to be triggered, and we saw structures like the $80.35 level, the $80 area, which also has been triggered during the early hours of today. So I hope you are able to take advantage of these opportunities during the early hours of today, and if you did, kudos to you for being on standby to have caught that move. So right now, what we want to be doing, you all know what we do. As soon as price moves significantly well in our favor, we want to be moving our stop loss accordingly to lock in some profit. Then at this point in time, considering the strong engulfing bearish candle that we have here, I will be advising us to move our stop loss somewhere around the $79.80 level, secure this current position, and at the same time give room for price action to breed, with the hopes that we could still see a trend continuation to the downside. And in fact, if you look at the current structure here and considering what has been happening in this market in the last couple of hours, you will see that price action has been finding some buy pressure somewhere right around that $79.20 level, giving us a clue that there is a momentum build up in the favor of the buyers. Now the question is this going to be a long-term bullish momentum, or is it just going to be a retracement of that previous impulse leg that started during the early hours of today? So we might likely be seeing this kind of situation here, where price dropped into the $79 area and buy pressure resumed, probably in the form of a retracement of that previous impulse leg, probably into the structure at the $80 level or the $80.35 level, which also shares a beautiful confluence with that bearish trend line that we identified earlier. And if that is going to be the case, then definitely we want to be looking at that zone here for opportunities to join a trend continuation to the downside. And if the appearance of selling pressure comes in, when we scale down to our lower time frame, seeing how difficult it is for buyers to break out of that trend line, then definitely we shall be getting ready to join another wave of bearish momentum. So these are one of the scenarios that we are going to be looking at today. And if you are a counter trend trader or a scalper, you might want to take advantage of this potential bullish momentum at this point. And to do that, you would want to scale down to a much more lower time frame, let's say the 5 minutes or 10 minutes time frame, where you look out for a breakout, a retest of that $79.50 level to join this counter trend to the upside. But if you are not a counter trend trader, you are not a scalper, you don't feel comfortable taking trades against the trend, then I would advise that you stay out of this one and wait for price action to come into the structures here, where I said we shall be looking out for selling opportunities to join the trend continuation to the downside. And for scalpers and counter trend traders, we have a potential of about 80 pips to catch here if price action moves as expected. So that is one scenario here that we are going to be looking at when it comes to buying around that $79.50 level. But if the bullish momentum that we have projected here, which I said is a counter trend opportunity, continues in such a way that it breaks out of that $80.35 level, which we identified here yesterday, then at this point price action would have broken out of that bearish trend line, which for me at that point will be a signal that a momentum shift is about to come. And if that happens, then that trend line there, the breakout of the trend line there, will be a sign that the trend line may no longer be strong enough to continue to hold that bearish momentum. And if that is going to be the case there, then we'll still need some confirmations to happen, which would reflect on the chart in the form of a retest of the structure at the trend line or the $80.35 level, where we look out for buy pressure on our lower time frame to join that trend continuation to the upside. So that is how we are going to be looking out for buying opportunity around that $80.35 level. Now that is one scenario that is second scenario we are looking at here. Then the other possibility that could happen here, what happens if price action does not continue to the upside and instead it continues to drop to the downside? Well, at this point I've already identified a simple setup here which I think we can use to guide a potential sell trend to the downside, and that is the $79.25 level. And for the sake of this video, let's figure that out so that we can have a visual understanding of what we are talking about here. So we have the $79.25 level. So if it so happens that price action drops below the structure, you scale down to your lower time frame and we start seeing selling pressure resume below the structure, then we might be in for another wave of bearish momentum to the downside. And if this move was so fast that we might not see a retest of structure, I would advise that you could have a sell stop order below the $79.25 level, have your stop loss somewhere around the $79.50 level, somewhere above that structure, which will be dovetailing to about a 30 pips stop loss, and let's see what will happen below that area. So it's a risk worth taking. We already made some profit this week on this one, so you could still afford to risk probably 1% of your portfolio size on this current position. So we should have a stop loss around that $79.50 level, which I said earlier dovetails to about 30 pips in stop loss around that level. So this is what we shall be looking at on the US oil today to guide our trading activity for this week. And remember how important that bearish trend line is. As we all said earlier, it's going to be our yardstick for trading activity for the remainder of this week. So as long as price remain below this bearish trend line, the tendency of a trend continuation to the downside is still very, very valid. And if a breakout of the trend line happens, which also shares a confluence with the $80.35 level, then we'll be looking out for buying opportunity in this market. So that is my view here on the US oil for today. It's a simple setup, so let's be on standby to catch any of this opportunity as we continue to monitor price action. If you have any questions regarding what I just explained so far, feel free to drop a comment or two in the comment section, and I will be checking the comment section from time to time to see if there are any questions for me. Alright, with that being said here, we shall be moving on to the next pair. And I think I can see some comments in the comment section. Okay, Dino says thanks. 788, how are you doing? Good morning. 828, I'm doing well, thank you. Trust you are doing fine too. And I can see 797 says he's new here. very excited to have you around 797. I hope you're beginning to get to understand how this works here. Please let me know your feedback in the comment section. Valerie, how are you doing today? Glad to have you around. I didn't see you yesterday. Trust you are doing well. 788, good morning to you. All right, so in the absence of no questions, I want to assume that we are good to go. So I will continue with the next option. So the next option we are going to be looking at this morning is the US Tech. And on the US Tech, we had some beautiful positions yesterday. But before we go into that detail, let's look at how the week has started for us on the US Tech. So the US Tech started with a situation where price was trapped within about a $50 channel thereabout that was between the 13,120 and the $13,075 level during the first 13 hours of the new week. So we had a simple channel there, and you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the resistance line for buying opportunity or breakdown of the support line for selling opportunity. And it was interesting that on that day prior to our live session, we already had a breakdown of that support line where price action came back to do some retest of structure, even moved to as far as the 13,100 level. That was exactly during our live session on Monday, and I told us all that we should be having a sell stop order below the $13,075 level to join a move to the downside. And like a couple of hours into the New York session, we had our sell position triggered as price action moved roughly about 97 pips in our favor before the appearance of this buy pressure resumed on Monday. And we were part of this move to the downside here. We moved our stop loss accordingly, locked in some profit before we were taken out of that position. And on Tuesday morning, our buy stop order above the resistance line as price action broke out of that 13,120 level triggered our buy position. That was our first buy position for the week. And you will remember during our live session on that day, I told us all that that was yesterday. I told us all that for those who are joined this bullish momentum here, you want to be moving your stop loss accordingly, lock in some profit as we wait out for more opportunities. And what we said here yesterday, we agreed that we are going to be monitoring how price action will be reacting to either the 13,150 level and the 13,120 area to decide if we are going to be buying the US Tech. And I told us all that what we want to be seeing at this juncture is the form of buying pressure around this area where sellers finds it difficult to break down the 13,150. Then we could join a trend continuation to the upside. And if that does not happen, I said we are going to be looking at our price will look out for buying opportunity at the 13,120 with the appearance of buy pressure above this level to join that move to the upside. But that did not happen too as well. As you can see, we had such an engulfing bearish candle which strike through both of the structure to negate any potential opportunity to buy in this market. So we didn't have the opportunity to join a trend continuation. And if you had recalled vividly what we talked about the $13,075 level, we said the only way we are going to be selling the US Tech is only if price action breaks down the $13,075 level, which also has a confluence with that bullish trend line that has been supporting that bullish momentum in the last couple of weeks. And if you had followed this accordingly with a sell stop order below the structure, you would have had a sell position triggered. And at this point, price action is currently running with about 85 pips in profit. So if you are taking advantage of this move, Well done, and kudos to you for being on standby to have caught that move. And you know what next we want to be doing here? We want to ensure that we secure this current position by moving our stop loss accordingly to lock in some profit. Obviously, we don't want to get caught up in any sudden scenario that will cause a pullback and take us out in a loss on this position. So the most appropriate area I will be suggesting, considering the previous structure here, is the $13,020 area. So anywhere right above the $13,020 mark seems most appropriate to lock in some profit here. And the reason that is, we still want to give room for price action to breed, with the hopes that we could still see some retracement back into structure in anticipation of a trend continuation to the downside. So that is how we are going to be selling the securing this current position for today. Now that we are going into the New York session today, how do we intend to trade the US tech? What are we want to be seeing on this chart? And especially for those who had missed out on this opportunity, what do we want to be seeing? Well, before we go into that details, what I want us to do first of all here is to dive right into the higher time frame. Let's have a quick review from an holistic point of view, what is really going on the higher time frame around the structure. Then we shall be coming back afterwards to dissect and make a decision for today. So right now we are on the daily time frame, and look at what we have here on this chart. So what I will be focusing on is the activities since the beginning of this year. So we saw this beautiful platform where this accumulation zone around the 10,500, which has been a very strong buying niche for participants in this market, and this lasted about 4 to 5 months before we saw the spike that rose out of the structure at the beginning of this year. And since then, price action has transitioned into what looks like an ascending channel after connecting the series of higher highs and higher lows in this market. Now, the most important structure we are going to be focusing right now is that area around the 12,800. Remember how important we say this level is, and how this level has also been a major determinant of price action since the month of August last year. Look at what happened here in the month of August. Since the breakdown of that level, we saw how that engulfing candle sliced through that structure to the downside, and since then price action has been trading below the 12,800 to further emphasize the strength of the sellers at this point. And not until the beginning of this month that we saw price action break out of the 12,800, and that was the first time price action would have broken out of that structure in the last 7 to 8 months, which is quite significant actually. But one thing we observe here is that despite the breakout of that structure for the first time in such a long time, it is quite obvious that the bullish momentum here seems to be diminishing, as price action was unable to break out of this structure. Hold on a second, can you hear me? I'm trying to see if my charts okay, hold on a second. Let's see what we have here. Okay. Hello everyone. Sorry for the breaking transmission. That was due to some technical issues, but we are good and fine right now. So sorry about that, and we have it resolved. All right. So let me go back into where I stopped before the sudden breaking transmission happened. So we had the situation here at the beginning of the year. I was talking about how important the 12,800 level has been since the month of August last year. And one thing I stated here is how that area has been a strong selling niche since price action sliced through that structure in the month of August. And since then, price action has continued to trade below the 12,800 to further emphasize the strength of the sellers in this market. However, at the beginning of this month, we saw the final breakout of that structure there, which happened to be the first time price action would ever break out of that structure since in the last 7 to 8 months in this market. However, if we zoom into the current structure here, that is taking into consideration what has been happening in this market in the last couple of weeks, despite the breakout of that 12,800, it appears that buyers are still finding it difficult to continue with that momentum it started the year. And this is more evident after noticing what has been happening after the breakout of the 12,800 a couple of weeks ago. Now, the scene we saw here is a consolidation phase between the $13,220 level and the 12,800. So there is something like an indecision currently going on in the market, which has lasted about 14 to 70 days now. I'm giving us a clue that there is an indecision around that area. So what next will be happening right now is what we don't know. As you all know, whenever we have this kind of simple flat channel like this, we only need to be very patient to wait for price action to either break out the resistance line or break down the support line for a signal of where price action will be going. However, since the beginning of this week, we have been trying to capture where price action might likely go so that we can actually take advantage of that move even before the breakout of either the resistance or the support line will happen. And we have been on a sell momentum. We bought at the beginning of the week. Okay, initially we had a sell position at the beginning of the week. Then on Tuesday we had a buy position, and in the last since the early hours of today we enjoyed another sell momentum in this market. So you will see that there has been a level of indecision at this particular point in time. And to further buttress this, we have seen how the sellers have always come in at around 13,100 level in the last couple of weeks to negate all attempt by the buyers to break out of that resistance line at the 13,220. And if you look at what happened just yesterday here, look at the candle of yesterday's trading session. We have something that looks like a shooting star candle, which from a technical standpoint gives us a clue into the presence of the sellers in this market. And with the look of things here, this consolidation phase we have here has a likely chance of turning out to be a reversal pattern, which might lead to the breakdown of the 12,800, where it is this the zone of the sellers to incite a sell-off in this market. And if we take into consideration the impulsive move that started during the second week of the month of March, you would agree with me that a retracement phase seems overdue at this point, probably in anticipation of that second wave of the bullish momentum that started in the month of March. So these are things that we are going to be looking at. So we shall be scaling down into a much more lower time frame to see if this bearish momentum will continue in such a way that it will break down the 12,800 for more selling opportunities. So with that being said here and the information we have gathered on the daily time frame, let's scale back down into the 1 hour time frame where we want to see how participants has been reacting to this current structure. And before I go into the 1 hour time frame, let's look at the 4 hours time frame, which we actually identified a simple setup, which I said at the beginning of the week will be one of the platform upon which we are going to be guiding our trading activity this week. So what we saw here on the 4 hours time frame is taking into consideration the trading activities since the beginning of the month of March, and it is quite obvious that price action has been bullish here. As you can see, we have a trend line already after connecting the series of higher lows in this market. And since price action break out of that 12,850 level, we have been seeing some buy pressure resume around that area. But one thing for sure is that the bullish momentum after the breakout of the 12,850 has been reducing, meeting strong resistance from the sellers between the 13,200 and the 13,100 area. And if we look at what has been happening here in the last 3 to 4 hours, you will see our price action is currently trading along that bullish trend line that we just identified. And you would agree with me at this point that we are at a critical point in this market where the buyers could take over, and as well the sellers could also has a potential of pushing price to the downside. Now the question at this point is, will price action respect this bullish trend line one more time to incite a trend continuation to the upside, or are we going to be having a breakdown of this trend line to incite a sell-off in this market? So this we are going to be looking at in due detail when we scale down to the lower time frame. But before we scale down into the lower time frame, we want to map out the structure here, which has been a strong buying niche in the last couple of weeks in this market, and that is the area around the $13,000 mark. So if we bring out our line chart, we see things more clearly at this point. So I'm going to be mapping out the $13,000 level, which you can see here, which will definitely be our yardstick for trading activity for today. So we are going to map that out. So we have the $13,000 level, a very psychological level considering the round figure of that price. So we have the $13,000 mapped out right now. Go back to our candle chart, and it appears price has broken the structure a little bit. And if we go to as far back as last week's trading session, we saw how this level has been a very strong buying niche in this market. So if it so happens today that we have a breakdown retest of the structure, then this will be a sign that both the trend line and the support line does not have that potential to continue to maintain that bullish momentum, and in that regard we shall be looking out for selling opportunities. But if buy pressure resume at both the structure, it's a very important confluence. We could be looking out for a strong bullish move to the upside. So this we shall get in full detail when we scale down to a much more lower time frame, and that is our 1 hour time frame. So for those who are still in a sell position, I hope you have moved your stop loss, secure the current sell position we took advantage of at a $13,075 level, and let's see how price action has been reacting to the $13,000 mark. Now on the 1 hour time frame, we already have an engulfing bearish candle that has broken down that structure. So you all know what we look out for whenever price action breaks down a key significant structure like this. We want to see some retest of structure on our lower time frame, something like retest of the trend line or the $13,000 mark, where the appearance of selling pressure, where buyers are finding it difficult to climb above the structure, then we might be in for another wave of bearish momentum. So below the $13,000 mark here for today is where we shall be looking out for more opportunity to sell. So let me label this. We have sell breakdown, that was a typographical error. So sell breakdown, retest of that structure, the $13,000 MAC, and we also have another level here. Hold on a second, I will show you that in a moment. So we also have another level here at the 12,950, I guess, another psychological level, which has also been a buying niche in the past. Hold on, 12,950. Okay, so we place it at the bottom. Right, so this is where we have the 12,950 as well. So these are structures. The breakdowns of the structures will be welcoming selling opportunities in this market. So let's be on standby to catch that move. Now, there is one thing I would like to make mention here, and that's bullish trend line, which is here. So this all breakdown could still turn out to be a false breakdown. So we could still see some buy pressure around this area where price would respect that bullish trend line one more time. So we could still have a situation where price will climb to the upside here. But one thing I want us to do, if we have a breakout retest of this trend line and we join the bullish momentum to the upside, as soon as price gets into the $13,075 level, we want to be moving our stop loss to lock in that buy position as we wait and see how price action will be reacting to the $13,075 level. Remember, this level was broken to the downside yesterday, and from a technical standpoint, whenever price action breaks down a structure, we expect it to come back, retest the structure to inside another wave to the downside. So because of this technical expectation, we want to move our stop loss, secure the buy position, wait for price action to react to this level, and if we start seeing sudden pressure below this area, then we get ready to sell. Then a further breakdown of that trend line will further confirm a strong bearish move to the downside. So let's keep all this in mind as we continue to monitor price action from this current structure. If you have any questions, let me know right in the comment section. Miyagigi, good morning to you. You're welcome. Glad to have you around today. Senko, how are you doing? Senko 788, hello to you. 245, good morning. 799, good morning to you too as well. So with that being said here, and in the absence of no questions, I want to assume that we are on the same page. So let's dive right in to the next pair for today. So I have to run through this quickly because of the time frame we have left. So the next pair we are going to be looking at is the GBPUSD. On the GBPUSD, though we have been bullish this week so far, but things are looking a little bit choppy in the last 24 hours. Before we go into the details on that one, let's look at how the week has started for us on the GBPUSD. So now look at what we have here on the 1 hour time frame. We saw the week started on a bearish note where we had the resistant line for the week sitting at the 1.24200 level. So we saw at the beginning of the week how buyers were finding it difficult to break out of the structure, hereby giving us signals of how strong the sellers were at the beginning of the week, and we were opportune to have one sell position at the breakdown of the 1.240 level at the beginning of this week, where price action moved about 50 pips thereabouts before this bullish momentum began. And yesterday, during our live session yesterday, I told us how important the 1.24200 level, which was the resistant line had the week, is going to be our key structure for yesterday's trading session. And I said a breakout retest of that level, anything above that structure, is an area we want to feel comfortable in a buy position. And as you can see, in the last 24 hours, price has spent most of the time right above the 1.2420 level. And following the consumer sentiment index report from the UK bucket this morning, we saw this engulfing bullish candle spring out of the 1.242 one more time again, and this moved about a 53 pips in our favor before this bearish move came to the downside. I hope you are able to scoop some profit off that move as price action moved in that direction, and I do hope you moved your stop loss accordingly to lock in some profit as we normally do as soon as price moves in our favor. And if you have done that, well done to you, as you would have scooped in at least some profit, though it might not be as significant as expected on that one. So right now, as we head into the New York session today, what is going to be our plans? What are we going to be looking at on this chart that will give us an inclination of what to do? Well, the first thing I would like to state here is to acknowledge the fact that price action has been bullish since the beginning of this week. As you can see, we've been witnessing some higher lows in this market, and when we connect the series of higher lows, what we have here is a beautiful bullish trend line, which we agreed on yesterday as going to be serving as our yardstick for trading activity. And what this simply means is that as long as price action remains above that trend line, we shall feel comfortable in our buy position. And for the sake of clarity here, I would like to see if this trend line still fits into the current structure. Okay, it does fit in, so we are still very good on that one. And if we look at the candle chart, let's do some little readjustment, and here we go. We still have that bullish trend line looking very valid at this point. Now, the next point of concentration is that sell window we identified yesterday. And look at the sell window here, situated between the 1.25 and the 1.24500 area. Remember, we identified the sell window here after taking into consideration the impulsive move that started at the 1.255 level to the downside. And I told us all that the bullish momentum we witnessed during the later part of the New York session on Monday may likely be a retracement of that impulsive move to the downside, where I said we shall be looking out for selling pressure around that sell window to anticipate a trend continuation to the downside. And if you look at what has been happening here since the early hours of today, we have been noticing selling pressure just right around that sell window. Look at after the CPI event this morning, we saw our price action do sharp rejections of the 1.2470 level, giving us a clue of how present the sellers are at that point. So despite the engulfing bullish candle we saw this morning, we saw that buyers could not maintain that momentum to continue to the downside. And following that, we saw engulfing bearish candles in the last couple of hours to further emphasize the strength of the sellers at this point. Now, the next line of action is going to be around the expectation that this might likely turn out to be the beginning of that retracement phase to the downside. As you can see, we had the impulsive move right here, retracement into the structure. As we can see, buyers were finding it difficult to continue to the upside, though we still have the bullish trend line supporting that bullish momentum. But if at any point in time a breakdown of that bullish trend line happens, selling pressure resumes below the structure, we would have no choice than to get ready to sell the GBPUSD. So what we are looking forward to sell the GBPUSD is an outright breakdown retest of both the trend line and the 1.24200 level to join that move to the downside. And in fact, we'll still need some confirmation to happen in the form of a retest of that structure after it has been broken. And if we look at what has been happening since the beginning of today, we can see we have been seeing some bullish pressure sharp rejection of the 1.240 level, hereby negating some selling pressure around that area. And this candle here is still showing us signs that buyers are still trying to maintain that momentum to the upside. So let's see what will happen at this point. So at this point in time, we need some level of patience around this area to be able to catch that move to either upside or downside here. Now, selling the GBPUSD, I've told us we want to see a breakdown of both the trend line and the 1.2420, selling pressure below the structure where buyers find it difficult to continue to the upside. Then we could join that bearish move to the downside. Then we should have a sell stop order below the 1.2400 level. That is, if price action breaks down the structure, then it would have taken out all the buy position around that area. Then we would need some more liquidity, which will come in the form of retest selling pressure, which could welcome more selling opportunity on the GBPUSD. So on the GBPUSD today, I'm tending towards a bearish momentum. So I'm looking forward to selling opportunity below the 1.24200 level, where a further breakdown of the 1.2400 will be welcoming more opportunities in this market. So in as much as we're looking out for selling opportunities, you all know what we do here. We want to ensure that we are also as flexible as the market. So we might likely be seeing some buying momentum come in since price is still along that trend line. And what do we want to be seeing here that will make us to buy the GBPUSD? Well, for me at this particular point in time, I would rather see price action climb back above that trend line and the 1.2420 level to give me a clue into a potential trend continuation to the upside. So I want to see a price climb up, probably then do some retests. I look out for some buy pressure, price action continue to find higher lows, then I will see that as a sign that buyers are gradually gaining some momentum. Then I could join that move to the upside and ensure that you are moving your stop loss accordingly. I cannot overemphasize the importance of moving your stop loss accordingly in any bullish momentum around this area. Remember, we have a sell window here which has a potential of sending price crashing to the downside. So if you are buying around this area, ensure you are moving your stop loss accordingly, locking in some profit as price action moves in your favor. So that is that on the GBPUSD for today. I hope I made myself clear, and if you have any questions, feel free to let me know in the comment section. So I will be moving on to the next pair, which is the XAUUSD, and unfortunately I only have 2 more minutes left, but I'll run through this quickly and try to make it as explanatory as possible. So here we are on the XAUUSD chart, 1 hour time frame, and this was how the week has started for us today. And you would acknowledge the fact that price action has been choppy between Tuesday's trading session and this moment, though we had price action trapped within a channel, which was actually the structure we have been using since the beginning of the week to guide our trading activity. So we had this trap between the $2006 MAC and the 1996. We had our first sell position on Monday at the $2006 level. We also added one at the breakdown of the $2000 MAC. We also added this one here, so we are quite profitable on the XAUUSD so far. However, during the course of the live session yesterday, we acknowledged the fact that we have been witnessing some bullish momentum in this market, which we said could turn out to be a retracement of that previous impulse leg that brought price to the downside. And we had a structure, I think we had a new chart for that setup there, and we scaled down to the 30 or the 50 minutes time frame to look out for trading opportunity. So this was our first sell position at the beginning of the week, right below the 2007. Then we also acknowledged the fact that this is a bullish, this could turn out to be a retracement of that bearish impulsive move to the downside. Now, during the live session yesterday, this was where we were during the live session where I said above the $2,000 mark will be an opportunity to buy. So we had a buy position just a couple of hours into the New York session yesterday, and price action moved about 120 pips in our favor before this bearish momentum began. And if you remember vividly, at the beginning of this week, we acknowledged the $2,000 mark, which we said is going to be serving as our yardstick for trading activity for this week. And we also acknowledged how important that $2,000 level is on our 4 hours time frame. So for the sake of clarity, let's run through what it looked like on the 4 hours time frame, which I made mention on Monday. So this is the structure here, and that is the $2,000 mark. As you can see, if we go to as far back as the month of March, we saw how the $2,000 mark was a strong selling niche at one point before the breakout of the structure happened at the beginning of this month. And we also acknowledge the fact that last week trading session closed exactly around that $2,000 mark, which also shares a confluence with that bullish trend line where we said anything could actually happen. So we said and agreed that if price action finds buy pressure above the $2,000 mark, we look out for buying opportunity, and if price action breaks down the $2,000 mark, we look out for selling opportunity. So this was the basis upon which the idea of trading the XAUUSD was placed at the beginning of the week. So let's scale back down into the 1 hour time frame. Now back to the 1 hour time frame here. So yesterday we had the privilege of being part of this profitable journey as price action broke down the $2,000 mark, as you can see here. And since yesterday, we can see our price has moved significantly well in our favor. At least in the first position, we have about 280 pips in profit right now. And we also identify key structures where we said we shall be having sell stop orders to take advantage of more and maximize our profit here on the XAUUSD. So we had structures had the 1,996 and the 1,987. So this one here was what I identified during the early hours of today. So you must have had minimum of about 400 pips running on this one. And if you are still in this trade right now, my advice is that you want to be moving your stop loss right now to secure this current sell position. And what do we want to be doing? Where do we want to be moving our stop loss? Well, the last structure we have here is the $1,976.50 level here. So I would want to give some room for price action to break. So let's place it right above the 1,980. Lock in some profit. Give room for price action to break with the hopes that price action will continue this trend continuation to the downside. Now, for those who had missed out on this opportunity and those who are planning for taking advantage of any trading opportunity today, what do we want to be seeing in this market and how do we intend to trade this? Well, the first thing I would like to say here, patience is very required. We need to be very patient at this point, as we still need some structures to evolve before we want to be joining. So if we consider this impulsive move that started yesterday, we still need some consolidation phase, some retracement to happen before we want to be considering adding more position or joining this trade. So we might want to see how price action will react to these key structures like the 1,976. We want to see how price action will react to that level, or the 1,987, or the 1,996 and the $2,000 mark. So these are areas we are going to be looking at. So what this simply means is that if buy pressure resumes around this area and if price action continue to find higher highs and higher lows, I will see this as a retracement phase. And if this is going to be happening, since we've moved our stop loss at one point in time, we might be taking out of our position. But one thing we want to be doing is to wait and see how price action will be reacting to the structures 1976, 1989. So what we want to be seeing around the structures are forms of reversal patterns, selling pressures. Then we could join a decline to the downside. If it goes to as far as this area too, we want to be seeing selling pressure to join that decline to the downside. And if you're a counter trend trader, you're a scalper, if price action breaks out of the 1976 with buy pressure, you might want to join your counter trend opportunity to the upside. But if you're not comfortable, you are not a scalper, please stay out of this and wait at this bus stops here at the 1987 and the area between the 1996 and the $2,000 mark to join the trend continuation to the downside. I hope I made myself very clear at this point. So that is how we are going to be trading the XAUUSD for today. And if price action continues to the downside, well, I will not advise you to jump in front of a moving trend. You have missed this opportunity, you have missed it, and just be patient and wait for another opportunity to come at this point. So on the XAUUSD, and for those who had missed out on this bearish momentum we took advantage of during the early hours of today, just stay clear. Hold on for some choppy situations to happen. It could be a retest, or we could see something like a consolidation phase, like a bearish rectangular pattern where a breakdown of the structure happens. Then we join the trend continuation to the downside. And if it turns out to be a reversal pattern after a consolidation phase, then a breakout of the 1976 will give us a counter trend opportunity, which I said that if you are not a scalper or a counter trend trader, you don't feel comfortable taking counter trend opportunities, stay clear of them and wait for at the bus stop at the 1987 and the 2000 and the 1996 area to anticipate the trend continuation to the downside. So that is that on the XAUUSD. I hope I made myself clear, and let's see how price action plays out in the next 24 hours. And definitely we shall be coming here again to review how well these pairs have been doing. All right, I see your comment, Mia Gigi. I'm glad you found it very clear and understandable. So I will be going into the last pair for today, and that is the USDJPY. I'm already out of time. Okay, so let's go into the USDJPY and see what is happening on this chart. We had some buy positions, significant move this morning, and I'm so excited to share this with you, and I hope you are able to take advantage of this opportunity. So let's run through how the week has started for us on the USDJPY. So this is what we saw at the beginning of the week. We saw this simple flat channel, and you all know what we look out for whenever we have this kind of simple consolidation phase happen in the market. We need to be very patient, waiting for price action to give us a signal of where it wants to be going for the week. So with our sell stop order below the support line and our buy stop order above the resistance line, we had our first buy position for the week, and in fact price action moved about 50 pips thereabout in our favor before we saw the sell pressure resume in such a way that it broke down the 134.200 level, which I told us all yesterday that if price action breaks down that structure, we want to be selling, and I hope you moved your stop loss accordingly to lock in some profit before this bullish momentum began. And if you had done that, you would have been taken out at a worst case scenario of break even. Now, with the situation that happened during the early hours of today, and remember how important I told you the 134.200 is for any buying opportunity in this market. Remember, that was our resistance point at the beginning of the week, and I told you that at any point in time price action breaks out of that resistance line, we want to be having a buy position. And in that regard, I hope you had your buy stop order above the 134.200 level to join that bullish momentum to the upside. And remember also, we identified the structure too as well at the 134.550, which I made mention that a breakout of that level too as well will be welcoming more buy position in this market. And if you are done so right now, you will currently be on the first position with about 70 pips in profit, and the second position at the breakout of the 134.550 with about 36 pips in profit. So you have roughly about 100 pips in profit right now just on the USDJPY. So what you're going to be doing right now, you all know what we do. After price action moves significantly well in our favor, we want to be locking in some profit, move our stop loss accordingly, lock in some profit, and let's see what happens afterwards. So at this point in time, I will be suggesting we have a structure here at the 134.700. So let's move down a little bit, put our stop loss right below that structure. Let's give some room for price action to breathe and see how far this move is going to go. And for those who had missed out on this opportunity, it's okay. We'll still think price will still give us some more opportunities to join this move, as I'm of the opinion that we are still going more bullish in this market. So since we already have a breakout of the 134.550, you all know from a technical standpoint that whenever we have a breakout of structure, we expect that price action will still come back, do a retest of that level in anticipation of another wave to the upside. So if that is going to be the case, we want to be part of that move. And if it drops below the 134.550, we still have another bust stop at the 134.200, where we can still look out for more buying opportunities to join that trend continuation to the upside. So we remain patient here, waiting for more opportunities at this point. Now, what happens if price action does not drop to the downside in this case, and instead it continues to find higher highs? Are we going to miss out on that opportunity? No way, we are not missing out on that opportunity, as we already have a previous high here sitting at the 135.10 level. So we are going to map that out and then have a buy stop other above the structure. And the reason why we are having it right there is simply because from what we've seen so far, it's looking more bullish, and a breakout of that level, I think, will give us more opportunity to add more position to our existing trade and even join that trend continuation to the upside. So let's be on standby for that one too as well. Then another thing that buttresses the strong bullish momentum is that simple structure we identified on the daily time frame. So for those who missed out on our session on Monday, let's quickly run through that daily time frame so that I can buttress how important the bullish momentum we are seeing here is in alignment with this current structure. So I shared this on Monday during the beginning of this week. I made mention of the breakout of this bearish trend line here, which was a signal that the trend line does not have that capacity to continue to hold that bullish momentum. And from a technical standpoint, whenever a breakout of structure happens like this, we expect that a retest of that trend line will happen. And as you can see what happened here, we begin to see buy pressure resume, where price action transitioned into a potential reversal pattern. And you all know what we do whenever we identify a potential reversal pattern like this. We want to identify a neckline area of that reversal pattern, which falls around the 133.800 level. And for this reversal pattern to be valid, we want to see price action break out of that neckline area and possibly do some retest of structure to give us a clue that we are going bullish at this point. So you can see how the 133.800 level is important at this particular point in time. So it means that as long as price action remains above the 133.800 level, we want to continue to look out for buying opportunity in this market. And when we scale down into the 1 hour time frame, what did we see there? We saw our key level at the 133.800 level be broken to the upside at the beginning of the week, and since then price action has been trading above the 133.800 level. So this is the 133.800 area, and as you can see, that level is our neckline on the daily time frame, and since the beginning of this week price action has been trading above that structure. So what we are going to be doing here is to continue to look out for more buying opportunity unless the market structure states otherwise. So let's continue to look out for more opportunities here, where a breakout of the 135.100 will welcome more positions. And like I said, if price action retraces to do a retest of the structure that was broken, then we look out for more buying opportunities. So as soon as price gets into that structure, we scale down to our lower time frame, look out for buy pressure, then we can join the trend continuation to the upside. Breakout of the 135.100 will welcome more opportunity, and in fact the retracement could even go as far as coming back into the 134.200. remember, that was our resistance point at the beginning of the week, which was broken, so we could still see price come into the structure to incite another wave of bullish momentum. So let's be on standby, and we shall be here tomorrow to review how well these pairs have been doing and get ready for the New York session tomorrow too. And it's on this note I want to call it a day here, and I trust you all had a wonderful time. And for those who are joining us for the first time, I hope you were able to catch one or two things from what we discussed here. But don't worry, with time you get to understand how this works, and you will be able to use the information you have gathered here to make your individual decision on your live trades. So on this note, I want to wish you all best of luck today, and I look forward to seeing you same time tomorrow, 11 a.m. 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs that we have been monitoring since the beginning of the week has been doing, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.